Hey traders, welcome back. Today we're diving into one of the most powerful skills in price action trading, reading the emotion hidden inside every candlestick. A lot of traders look at candles, but only a few actually understand what those candles really represent. Because every candlestick carries a message, a story of the battles between buyers and sellers. And once you learn to decode that message, your entire approach to trading becomes clearer, calmer, and a lot more confident. So let's break it down in simple terms. What are candlesticks? A candlestick is a visual representation of what price did during a specific period of time, maybe the 1 minute, 5 minutes, 1 hour, 1 day, or 1 week, depending on the time frame you choose to view the chart. During that period, the candlestick records 4 key details: the open, the high, the low, and the close. This gives us a quick picture of how price moved, where it started, how high it went, how low it went, and where it finally settled. If price closed higher than it opened, that candle is usually green, meaning buyers took control. If it closes lower, it's usually red, meaning sellers dominated that period. Bullish and bearish candlesticks. A bullish candlestick tells us buyers stepped into the market, pushed price upward, and kept it there. Like the example we are seeing on this screen, the green candle is the bullish candle. This tells us that price opened lower and went upward and closed higher, telling us that there was a movement to the upside. It gives us 4 cardinal points, 4 key points: the open, the close, the high, and the low. This is how low price came at this period we are looking at the chart, and this is how high it went. So for a bullish candle tells us buyers stepped in, pushed price upward, and kept it there. A bearish candle tells us sellers dominated the market and pushed price downward, like what we have on this chart. We have the open up here and we have the close down here, telling us the price went downwards. The open and high and low is at the same point. Looking at the bullish and bearish candle, we have the high upward here and we have the low downward here. The body represents where the market price opens and closes. It gives us the body of the candle. The price that represents the high is called a shadow or a wick, upper shadow or upper wick. The line that represents the low is called the lower shadow or the lower wick. Candlestick properties. If we are looking at candlesticks, we are looking at 3 things: the color, the body size, and the wick or shadow location. The color can be based on the trader's preference. The colors you choose to represent your bullish candles or your bearish candle. So a trader can choose whichever color he wants that best suits his personality to differentiate between the bullish candles and the bearish candles. Then the body size. The body size of the candle, which is the thicker center part that represents where price opens and closes, tells us about strength and control, who is in charge of the market. If we have a big bullish body like we have there, it represents buying pressure. That means buyers are in control and the strength of buying in the market is high. If we have a red big bodied candle, it means that sellers are in control and there's enough selling strength in the market at that particular time. If we have a smaller body candle, it tells us that there's a reduced strength or control of buyers, either buyers or sellers, depending on the color of the candle that is printing at that particular time. A smaller body candle tells us reduced commitment. If you're on the chart and you're seeing consecutive bigger body candle and it gets to a certain point, you start seeing smaller body candle, it tells us that there's reduced commitment for price to continue going up or reduced commitment for price to continue going down. Then the wicks tells us about rejection. The wicks or shadow tells us about rejection. A longer wick at the top means buyers try to push price higher, but sellers pushed it back down. A longer wick at the bottom means sellers tries to push price lower, but buyers stepped in strongly and pushed the price back up. The week reveals hidden fights between the buyers and sellers, and it tells you where the market refused to go further. So if you have a wick at the top of your candlestick, a longer wick at the top of your candlestick, it tells us that price refused going higher and that sellers have come into the market at that time and push price downward, revealing the wicks we are having in the market. If we see a longer wick to the downside, it's telling us that price is rejecting going down further and that buyers have come in and pushed price to the upside. Candlestick price action. Candlestick price action. There are three pillars that allows a trader to read a candlestick, not just see it. It's the sentiment, bias, and formation. Once you understand these three pillars, candlestick stops being shapes on the chart and becomes live market conversation between buyers and sellers. Let's talk about sentiment. Sentiment is the emotional tone of the candlestick. It tells you how does this candle feel. So if there are three main emotions of the candle, if we have a strong bullish sentiment, that means we have a larger green body, like we explained in the candlestick properties. If you have a larger green body, it tells you that the sentiment for that particular time, it's bullish. If we have a large red body, it tells us that the sentiment, the emotion for the market, the sentiment driving the market at that point, the narrative is bearish. If we have a smaller body, it just tells us indecision, or the market is just neutral and there might be change in direction, or the market might consolidate at that particular point. The bias of the candle is leaning towards the directional intention of the candlestick. The directional intention of the candlestick. So bias tries to answer this question. Given the recent price behavior, is the candlestick leaning bullish or bearish overall? So if you want to look at the bias of a candlestick, we are going to look at the total range of the candlestick. When you are talking about range of candle, is from the high to the low point. How high the candle has gone, how low the candle has gone. You divide it into two. We have the upper half and we have the lower half. So we have the upper half of the candle and we have the lower half of the candle. So if a candlestick closes at the upper half of the range, it means that candlestick is a bullish bias candle. Like the example we have here, this candle traded all the way down here, but before it closed, it went back up and closed on the upper half of the range. We divide the range from this high to this low. We divide it into two and we got the center point here. Price went all the way down to this low, but went back up and closed in the upper half of the candlestick range. This tells us that this is a bullish biased candle. The reverse is the case for a bearish bias candle. You pick the range of the candle from the low to the high, and we still divide it into two. We have the upper half and the lower half. If price closes at the lower half of the range, it tells us that that is a bearish biased candle. So the closing price tells you who won the battle for that particular candlestick range. So that tells us if this candle is a bullish bias or a bearish bias candle. The next pillar is the formation pillar. The formation pillar has to do with the structural meaning behind every candlestick you see. If you are seeing a candle that is printed this way on a higher time frame, if we want to look at its formation, we go to a lower time frame to look at the formation. So for a bullish candlestick like the example we are having here, which is a weekly time frame chart, these two candlesticks, these charts here represent the 4 hours. So for you to see the formation of a weekly candle, how the candle move, because in the lower time frame, you not just see one candle, you see several candles. We want to see how this candlestick moves structurally. So if we are using these two candlesticks here, these two bullish candlesticks down here, which represent this movement from this low to this high, we'll see that this candle moves structurally this way, and we went up, took out structure here. We had a pullback, move up, we have a pullback, move up. So you are seeing that this market is moving structurally, telling us that yes, we are in a bullish movement to the upside. So that's how you understand the formation of a candlestick on a higher time frame. So I prefer, when you're looking at formation, limit your time frame to the daily and the weekly time frame. If you want to see the formation of the daily time frame candlesticks, go to the 30-minute time frame. It's going to give you a clearer move of how one particular candle moves, so that you can understand structurally how that candlestick was formed. Putting it all together, every candlestick tells a story. Your job as a trader is to listen to what the candlestick is saying. When you understand the sentiment, bias, and formation, your trading becomes clearer. You make better decisions, avoid emotional mistakes, and finally start trading based on what the market is actually saying. Thank you for watching, and as always, stay focused and stay disciplined. See you in the next video.